Today is going to continue and tell us about more different chart patterns. And today, Kunal, like I can see coming in on the screens, gauging the resistance. We always keep talking about resistance levels coming in for the stocks. But how should one actually judge this? When do you say it's the resistance level coming in? And a very good morning to you, Kunal.
Good morning to you as well. Good morning to Sheryl as well as everyone. So yes, the topic for today is gauging the resistances on how do we actually try and decipher that when a stock or an index gets into a point where there is a lot of supply which actually oversees the demand for the stock price, and that's where we try and call it that that's a zone of resistances and the stock has been unable to cross above those resistances. So I've discussed a couple of charts over here. This is the charts for the Nifty Auto Index. As you can clearly see that the Auto Index, just about some time back has been showing signs of resistances. So how do we, gauge the resistances? Is the inability of the index to try and scale past above certain level. So this is the level, for example, 13,400, which I have marked with a very straight line. As you can see that there have been rallies into the index closer to this point, but then the index meets with a resistance and you see intraday selling coming back into the stock, into the index. Same is the case with this candle. These are the exceptional candles where the index tries to penetrate this level, goes up on the intraday basis, but on closing basis, it's unable to hold past about this level. And then it sees a closing which is much below the resistance of 13,400. And same is the case with the auto index, which was facing a resistance at the 13,400 mark. So this helps us to try and decipher that this is the major zone of resistances. Until the time the index or the asset class is unable to cross about the resistance, we try and reduce the long positions or we wait out for the breakout to try and initiate fresh longs. We look at another charts in a very similar kind of a line. The most recent rally which we've seen for the FMCG index, but then how the index consolidated. So as you can see over here that the index started to consolidate over here. This was the point where the index faced resistances. This was the point where you've seen supply overseeding the demand. Same happened for the index over here where you've seen supply coming back. So it falls into a point where the supply overseeds demand and the index is unable to break past above a level. Same was the case on this candle. This was one of the major attempts from the bulls to try and break past above the levels, but it failed and you see the fall in the index which happened post that. So that's the importance of resistances. That's how we try and gauge that which is the zone where the stock would try and take resistance, unable to cross above those levels and then try and get into a correction.
All right, so that's what Kunal taught us in BNSN Pathshala today, how to gauge resistances. And remember that this is the segment every Friday that we have for you, where Kunal will try and decipher all those jargons in the technical analysis world and will help you understand charts better. Thank you so much for that, Kunal.